And of course, that also helps in the re-rating. So when we sold the FMCG business, I took 100% of my proceeds that I got because I was a 50% shareholder and put it back into the business. We became debt-free. We'd committed to the markets we'd be debt-free by 2025. We became debt-free in 2023. By the virtue of the fact that we became debt-free, we were then able to announce the demerger of the lifestyle business, which was completed earlier this year. And then we announced the demerger of the real estate business. So by next year, mid-next year, third quarter next year, you'll have 3 separate companies. You'll have the lifestyle business, you'll have the real estate business, you'll have the engineering auto business. And the market has certainly rewarded it because they like pure play companies. If you see the lifestyle business, we've created best of class board there. We've created top class management. Same we will do with real estate. Same we'll do with engineering auto. So we're moving to a very different type of professional company. I've also got to think about it that I've also been here for over 4 decades. How do I set up the company for the future? How do I set it up for, my kids are not coming in the business. They're too young. So how do I set it up for the future?
Very, very interesting thought. And I'm just going to pick out a few of those points as follow-ups. Let me start with the sale of the FMCG play to GCPL, to Godrej Consumer. And then, of course, you talked about how you invested all of your stake back into the business. Let's start with the idea of hiving off the FMCG play. Did it seem non-core in a sense?
You know what? Everything is for sale at a price, and I think we got a very good price. I think it was one of the best win-win deals because from GCCL point of view, and I can run through the reasons why they thought it was a great buy, because they were able to immediately go from 6 lakh outlets we had to 2 million outlets that they have. They were able to take the EBITDA margin up from 8%, which we were, to 26%. And they got an established play in the FMCG space of deodorants. From our point of view, we took the money, we put it back into the business. That paid off debt. By paying off debt, we were actually able to do the demerger, which is what we always wanted to do. So it was a real win-win transaction. And you've seen the markets reward the demerger. And this is just the beginning of the journey. So Park Avenue, they will continue to make deodorants and advertise on it. We'll continue to make apparel and advertise on it. It'll work a win-win for both. And GCPL shareholders have certainly rewarded them. Our shareholders have rewarded us. So it was a really interesting financial transaction.
You also talked about the context of the demerger, which I thought was interesting from your comments, is setting it up for the next generation.
For the future.
For the future. Could be professionally managed, could be any which way.
See, my elder daughter is 19. I don't know if she's going to come into the business or not, but she's certainly not going to come in for the next 5-7 years because she has to get an education, she's doing other things. We set up a professional company. She'll still be the principal shareholder. My family will be principal shareholders. At that point, if she decides, we'll see if she wants to come in. If she doesn't want to, she's still got a system and a process that will do well for its shareholders. It's not only my family who are shareholders, there's so many outside shareholders who put their faith in us. So we have to do what's best for the business, we have to do what's best for the family, and if you can marry the two and do the best for both of them, it's the best of all worlds.
No, it's a very dispassionate and I would say practical view to succession. Yeah. In a country where family businesses, succession and professional management always get mired together, which is why I thought it was interesting.
Yeah, who knows? I don't know if my daughter after 5 years will want to even come into the business.
Yeah.
I don't know.
Yeah.
Today's young 19-year-old girls are totally independent in their mind. She might decide to become an artist, and she rides horses, she's an equestrian rider. She may want to pursue that. I don't know. So whilst that process on, we got to do what's best for the millions of other shareholders as well, for the tens and thousands of employees that are here, and we got to do what's correct for the business.
Now, undoubtedly, the idea of value unlocking is something that the market has rewarded. It has been good for shareholders. One vertical listed, one down to go. So now,
it's not one down to go. One will become two, so there will be 3 listed.
Yeah, okay, so there will be 3 listings.
Because the last one will break into 2.
will break into two. Correct. Now, just let's talk about each of the verticals. The lifestyle business is the lion's share. I think 74% of revenue, if I look at it on a consolidated basis right now. Will it always be in prime position, or do you see engineering, real estate catching up?
No, I certainly see real estate catching up, because real estate, you come to think of it, is only a 5-year-old business for us. So it's going. I think it will grow at a faster pace, because I believe if India is going to develop and India is going to be built, it's one of those businesses we've taken 5 years to set up a base. But where we were starting off with, say, 500,000 square feet projects, today I can take on 5 million square feet projects. And if I get a 5 million square feet project, it's not if, it's only a matter of when I will get it. That will then start growing at an exponential pace to where we are today.
Yeah, and even in terms of profitability, it looks most exciting, you would say, real estate, even in terms of EBITDA margins, etc. Also, your thought of the focus you have done, a lot of joint developments as a strategy, not only looking at, investing in very expensive land banks. Talk us through the strategy for the real estate business.
See, we started with our own historical land, and then we followed an asset-light model where we're going for JDAs. Today, we've got about 5 JDAs against all other relative developers in the city. It clearly shows that we are bringing a value proposition to the partner. We're the only company that's delivered 2 years ahead of RERA. We're doing a slab in 6.5 days. We have 25% market share in Thana. It's a good quality product. Our projects get sold off plan. So we've created our own rule book because we didn't know the rule book. We didn't come from the industry. So today, in Thana, we are a preferred developer. We've got Queen's Necklace on Bandra East, which is coming up now. We're on the 3rd basement. But almost 60% of inventory is sold, or whatever we've launched. So people are seeing that we are building quickly, we're delivering quickly, we're building a quality product. So which is why we're getting joint development. As long as I'm getting joint developments, why do I need to buy land? If I get a good piece of land at the right price, I might consider it. But we're very strict on financial discipline on what we want to do.
And that becomes a problem for a lot of people in this space, financial discipline. So in the foreseeable future, JDAs, joint development agreements, asset light and MMR is going to be the focus?
Mumbai is certainly the focus. We may look at Pune if something nice comes up, but certainly only Maharashtra for the time being.
Okay. Let me come to the lifestyle business, because of course that's the lion's share. We're speaking at a time which is great for the business, usually Q3, wedding season, we're in the midst of it. But the backdrop on consumption overall, and not talking about your company, but the space or even the sector, is a bit mixed. There are concerns about whether that appetite is there, whether that story of appetite for premium products continues. What are you seeing? What are you hearing?
From our point of view, if you look at the sectors that we are in, real estate continues to do well because we're in the affordable luxury. We're not in the 1.5 lakh rupee, 2 lakh rupee square feet market. We've got 3 products, 10X, which is 1 and 2 BHK, Address by GS, which is 2, 3, 4, and then Invictus, which is very small, which is 3, 4, 5. If I look at the wedding space, we are today got a very strong wedding season till April, May. First half was a little slower for a multitude of reasons, but there's strong demand. And I think if this continues, we'll see a demand recovery. Now, what's happening in sector by sector, it's a longer conversation, different conversation, but I can only tell you from our sector.
Yeah, and since FMCG is no longer your problem, then you don't need to answer the question about where's the middle class.
Well, we have the middle class today. Raymond goes from 300 rupees a meter to 10 lakh rupees a meter. That's 3,000 times in price point. We're the only brand in the world that does this. There's no other brand that does 3,000 times in price point in the same brand.
So you're not seeing pain at the store level in terms of demand?
So we saw it in the first 6 months. First 6 months was difficult for everybody. I think the recovery is there. I was just having a conversation with somebody on the phone, and he said we were just having that the amount of spend that's happening in a wedding today has. Yeah. I'm seeing it after 10 or 15 years that this kind of spending has come back, and that just speaks of a positive environment, a positive mood. I mean, the amount of wedding invitations that I've got, say, this December is more than that I have in the last 10 years. So it just shows there's a buoyancy, there's a spending, there's vibrancy, and I think there's always a lag that you'll see this off.
Yeah. Only thing about weddings is I don't know if the proportion of spends on the groom's clothes increases.
Yes, because see, what happens is it may not increase the proportion of everything else because you're spending a lot of money. But when you go from 2 functions to 3 functions to 4 to 5 to 6, you still need clothes.
Yeah.
You're not going to repeat the outfit on the next day. So one day you might have a churidar kurta, one day you might have a sherwani, one day you might have one gala, one day you'll have a waistcoat with a shirt, one day you'll have a suit, one day you'll have a jacket. You still have 6 different things you can give. I mean, we're talking about a wedding that's happening, it's starting today and is going on till Monday. So it's a 5-6 day wedding.
Yeah. No, and we're famously in times of weddings which go on for months. So, of course, it's an interesting time. But just to speak about the textile industry for a little longer, for Indian textiles, we're in an interesting space right now, vis-a-vis what's happening in the neighborhood. And I just want your views on that because Bangladesh, for example, has started selling off units of one of their largest textile companies, private textile companies, because of bankruptcy. You saw that impact with a lot of textile stocks also reacting positively. Just on the ground, I'm wondering if you're seeing that opportunity for India.
Absolutely. I mean, we've seen as soon as all this crisis started, customers have started coming here. But see, Bangladesh has 2-3 issues. One, it was more the casual wear industry, more than the formal wear industry. So that's already started to move here. We've got inquiries, but we'll take time to develop that because we're not so much in the casual wear space because we outsource everything. But in the formal wear, we immediately did get orders. Number 2, the biggest problem with Bangladesh was it had no fabric supply. So customers are now saying it's not only the cost that's the advantage, it's the lead time. So if you took, say, bought fabric from me, shipped it to Bangladesh, and then they did the garmenting, today you're getting an integrated solution in India. So you might pay a little bit more money, but you save 10-15 days. And then your demand forecasting for 10 to 15 days is shorter, and that has a value in money.
Having said that, the integrated solution was always available in India. That little bit more was the problem, right? It costs a little more.
The minute you have a little bit of instability in a nation, or you see a risk to your supply chain, you then move. Because a customer sitting in the US cannot afford a disruption.
So, which is why I'm wondering, because the instability is there right now, may resolve itself quickly, may not.
Once you change your supply chain, then to get it back is very difficult. Once you see, the way I always say, I say, if China was so good, why do our exports go up? There's obviously a value that a customer sitting in the US or Europe is seeing in you that is beneficial to him. Because if China was so good, they'd only buy from China. Why would they buy from you? If Bangladesh was so good, why would I be able to export? I would not be able to export. There is a value I provide, and I must continuously capitalize on that value I deliver.
On a sector industry basis, what do you think Indian textile companies, exporters need to do to become competitive in a sustainable way on a global level? I mean, this is Bangladesh, but then there's Vietnam, there are other countries who are competitive. What does the industry need to do?
I think one of the things this country needs to do on a macro level is the labor laws. We need to figure the labor laws out, which has been a long pending issue. But having said that, I think India is in a great place. Modi ji has put us right on top and from a perception point of view. And Mr. Trump coming, if he imposes tariffs of India, he's going to put more on China from what he states. So his tariffs will actually become a competitive advantage for us. So let's wait for him to come to power and see what he does. But he'll do less damage to India than I think he will do to China. Therefore, you'll have an arbitrage. Therefore, you'll become much more competitive. So if he does put tariffs, it's good for us at some level. But he'll also have to keep his inflation in mind. So I don't think he's going to do something that will hurt exports from India. So on a macro level, I think we're in a good space.
Yeah, you've led me beautifully to the Trump question. I think that's the one conversation point everywhere, all the time. What's your hot take?
Well, I mean,
Trump good for the world?
I think he will be. He may not deliver the products in the correct way, but I think he'll deliver the products. I think he's got his own unique way of doing things, and I think it will be an interesting time.
Interesting at the very least.
Yeah.
But from an India perspective, perhaps positive.
Well, I hope so. That's what I believe. I'm not an economist, but I believe so.
Yeah. You have now with these three verticals, and of course, a kind of, you're at a vantage point to even get a sense of what's happening globally. In terms of global economy, in terms of exports, do you see 2025 as an improvement? Of course, you have geopolitical crisis hovering, you have two large wars, Europe is in a bit of a crisis and that might continue. But what is your sense in terms of whether we're at the bottom of that cycle as far as exports goes? And
we are seeing positive inquiries on exports. Geopolitical issues are there. Nobody can run away from that. But what's happened in Bangladesh, what's happened in Sri Lanka. Sri Lanka were large exporters, but today with their own financial issues. So I think people are realizing the strengths of India. I think Modi ji has also positioned India as a very different country over the last decade. So it's working out positively for us.
We've spoken about textiles,
Yeah.
we've spoken about real estate. Let's talk a bit about the engineering division and the acquisition of many. Is that where the blue sky potential comes in for the group?
Yeah, certainly. I mean, see, we had an engineering business which was the old legacy engineering files, and then we had the auto components. Many had auto components, and then aero and defense, which is up the value chain. We merged the auto components together, so we have one team, reduction of costs, synergies on customers. Aerospace defense can grow exponentially. Here was a company that was stuck in COVID with debt, etc., but very good company with high quality precision engineering for titanium, etc. Aerospace, of course, is going to be booming. As you've seen, you can't buy an aircraft today. And the more components we're able to get into an engine or into an aircraft, the more will be the growth. Also, with the government policy that if you're buying so many aircrafts from whether it's Boeing or Airbus, they have to increase their sourcing to India. You position yourself in a great place.
But aerospace is so off everything else that the group has been doing. I just want to understand the thought behind getting into
The
it.
group is trying to fly.
No, absolutely. Absolutely. But I'm just trying to understand the expanse of it, the expanse of things, and then
What we're doing is, at the core of the group, we're delivering shareholder value. That's what we do. These are just different means. Lifestyle is a different mean, real estate different mean, engineering auto is a different mean. Which is why we come back to the first question of demerging all the entities.
Yeah.
You have different skill sets that are required for each business. You have a different management team, a different board, a different mindset. And eventually you look at the returns on each of those businesses.
Yeah, no, absolutely. It makes perfect sense to demerge if you're doing so many varied things. But just coming back to aerospace, what is the upside that you see in it? And for the engineering vertical, as and when, of course, it's a listed entity, what is the kind of upside you see in it? What is the kind of
I think I just said, if more and more aerospace components get sourced to India as part of the bilateral agreements, what share can you get of that?
What has changed?
And another level, I think, whether it's auto components, whether it's aerospace, let's take the whole engineering space. If you take Europe as a manufacturing area, this is not a labor issue there. It's a power issue there. It's not only the cost of power that's going on, because machining and all has a lot of power consumption. It's the uncertainty of power. So whilst labor cost is an issue for them, while they could live with a higher cost of power, with the war in Russia-Ukraine, even certainty of power is less. So they would be happy to move. I mean, I'm betting on the fact that a lot of manufacturing in Europe would start moving to this part of the world.
Yeah, that's where the big, I suppose, opportunity lies.
And the cost benefit. What you did with textiles 25 years ago and took advantage of labor, you can do it with this.
Would we be on par in terms of technology, in terms of R&D, in terms of those kind of skills?
The fact is, if we supply to BMW, Mercedes, Audi, obviously we're on par with the components that we make. So we make there are certain components we can make and certain components we cannot make. So we have to learn the components we can't make. But the fact is we supply engines, components for Boeing and Airbus. Those are high precision technology items. So obviously,
You spoke earlier in the interview, and it was a passing mention to China in the context of Trump, etc. I just want to understand how you see the China threat vis-a-vis India business. Our import dependence is now, and we're thinking about it, to cut down import dependence from China on various aspects. Even so, dumping is an issue in various sectors. How do you view China?
I think this is something the government has to look at. There is dumping even in the textile sector.
Yeah.
But eventually, I think branding goes higher than dumping. We've seen all kinds of product. All you can do is report it, get people caught for it, etc., etc. But beyond the point, you can't do anything. It's for the government to deal with this issue.
True, but can India be a competitive, viable alternative to the factory of the world?
Of course it can. I mean, China, see, it comes down to a mindset issue. China makes a lot of quantity, we make quality. They make volume, we make value. And I said to you earlier today, I said, if China was that good, why are my exports growing? It's very simple. I'm offering something which China cannot offer.
For you, Mr. Singhania, I'm just trying to understand, as you've undertaken this demerger exercise, does it change the way you look at your business, the way you strategize your day? What changes for you?
No, I mean, the work, okay, so from my point of view, the work is tripled now. We're running 3 companies as opposed to 1. You have 3 sets of directors, 3 sets of management teams, 3 different set of investors eventually, because the people who want to invest in real estate. So yes, I think in the short term, the work has changed dramatically, but water will find its own level.
So you have increased value for shareholders at the cost of your time management.
Well, I'm here to increase my own shareholder value, so why not? I'm happy. I'm enjoying what I do.
Do you do a 70-hour week?
I don't count the number of hours because I enjoy what I do, so it's not that I'm working.
Do you believe in the philosophy of a 70-hour week? Because that's
the complete man finds a balance for everything.
That's a great way to segue in. So what does the complete man do on his time off?
Well, I take my time off when I want my time off, and I'm working. So I'm always working. I'm always off. Because for me, work is pleasure. I could be sending 3 emails in a lift. It doesn't matter. And I find different ways to take my time off. So.
And of course, one of them is your passion for vintage cars.
Vintage cars, race cars. I've raced a lot. We're doing the big Raymond Auto Fest in January in Thana, which will be really good fun. I think it's going to be the largest collection of automobiles seen in this country. We've got vintage cars, supercars, vintage bikes, super bikes, modern classics, the Rolls-Royce Enthusiasts Club, Harley-Davidson Club. So it'll be a huge show, so it should be a lot of fun.
As we wrap up, you talked about the complete man, and we started this interview speaking about a legacy that has gone on for a century. Today, when you talk about the complete man, or the sense of what a complete man is it very different from 1925? And what has changed in your view?
Yeah, only exposure. The complete man has more aspects to become complete, because the proposition of being the complete man, as the world has grown, the exposure, your expanse has grown. In 1925, the complete man sat at Breach Candy and didn't really leave Breach Candy. So he had only 3 things to do, but today he's got 300,000 things to do.
Yeah. So here's to the 100 years of Raymond.
Thank you.
And building a legacy with a complete new look at what the future holds. Thank you so much, Mr.
Thank you so
Singhania.
much.
It's been a pleasure.
Thank you, it's a pleasure. Thank you.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through